So when you are broke and you owe the IRS, that might be the best thing for you. Here's why. Because if you have significant income or significant assets, the IRS is going to do everything in their power to squeeze every last dime out of you, unless you get help, right? But if you don't have much in assets or income, they can determine pretty quickly that you won't be able to give them anything. After all, my grandma always used to say, you cannot squeeze blood from a turnip. Now, that's saying you have to be old enough. So if you're not old enough, if you don't know what that saying means, please go ask an older person. Anyone over 35 should know what that means. Okay. I digress. So here's the thing. If you can demonstrate to the IRS that you don't have significant assets, what do assets look like? I'm not talking about a regular car. Like if you have some antique car that costs 50,000 or more. If you have a home that you may have some equity in, if you have an art collection, because yes, that's possible. You may have an art collection that might be worth something. Those are assets that the IRS would consider significant. Okay. But if you don't have those significant assets, and if your income is below a certain level, and there is, I've talked about before, this certain level that the IRS allows. It's called the allowable living expenses. If your income is below those expenses, then you could be placed in what's called uncollectible status. Now, there are people that call it different things. Some people just call it CNC. Some people call it uncollectible, not collectible, non-collectible, but just know that the IRS will not be able to collect on the amount of money that you owe.